Is the FutureSwap working as intended? Welcome to another DeFiChain video. My name is Kügi and I try to provide you with data and insights so that you can make smart decisions for yourself. Today I'm making the part 2 of the video about the DUSD stability. Today we talk about the dToken stability, and in the DUSD we said that there are all the measures defined, but not all of them are active yet. In the dTokens, we have it the other way around, or we have it different. We have all the measures defined. With all, it's basically the FutureSwap, so nothing, not much, but it's active for over a year now, and we can look at actual data or how it behaved or what it did, if it's doing what it should, and what the effects are. So that's what we want to do today, to get a bit of a feeling if this thing does what it should and how it might behave in the future. So let's start right in. To understand what the FutureSwap does and how to interpret the data, maybe first a bit of the background and why we need it. When we look at the DEX overview, we have on the left side our crypto tokens, or crypto pools. With every arrow is a pool where you can trade. In the middle is the DFI, basically the center of all the paths. And we have the stablecoins here. And on the right side, we have the dToken system with the DUSD as kind of the center. And then we have here all those gateway pools that connect the two worlds of crypto and dTokens, basically. In the last video, we talked about the DUSD stability, which is this, or is about those prices in here. And today we want to talk about the dToken prices, which are basically the prices here, because we have the Oracle prices, so the price of an SPY in dollar on the market, on the free market, and we have, which is the Oracle price, or comes in with the Oracle price, and we have the price of SPY in DUSD in this pool, which should be connected or close to it, but is not directly arbitrageable or something. So there needs to be some mechanic, some feature that keeps that aligned. As we said last time, basically the price of an asset is always determined by supply and demand. So if the demand rises, the supply needs to rise, otherwise the price goes up. If the demand goes down and the supply stays high, the price goes down. So it's always this balance. And if we want to keep the price in a certain range or at a certain level, we need to have an effect on the supply, so that it meets the demand in the correct ratio. For the DUSD, that's pretty tough, because if we have this area, we need the DUSD to affect the DUSD supply via the loans and everything. For details, you can look into watch the previous video, but it's always compared to a token or an asset that's outside of the dToken system. On the dToken, within the dToken system, with the dTokens itself, we only compare dTokens versus DUSD. So here we can't say we take DUSD. If we have too many DUSD, we take them and create and swap them directly. So we move tokens here and create them here to have the balance again, because that's the Terra Luna death spiral, where if it's debagged and there is too many of them, we take them and create the other tokens. Here you can swap them out, because both are basically both are loan tokens. So all tokens on this side are created or minted via loans. So if you have too many DUSD in the system that are created by loans, and you say, okay, we have too many DUSD, not enough SPY in comparison, so we have a premium because in SPY, because more DUSD are there in comparison than SPY, so we want more SPY in the system. We could take a few of the DUSD and really change it to SPY, and then we have a balance again. And if it's in a discount, so we have too many SPY, we could take those SPY and move it back to DUSD, and therefore we gain the balance. Because first, something too important to understand is such a swap, so such a change of tokens, does not happen via a swap on the DEX. On the DEX, if you swap, you do not change the overall supply of those tokens in the whole system, because the amount is the same it's just you have a certain amount of the tokens in the pool. Before the swap, you have the USD and there is the tokens in the pool. Then you put the USD into the pool, you take parts of the SPY from the reserve out of the pool. So afterwards, you got SPY, but the amount in the pools changed. So in the pool, the amount changed. So overall, it's the same. It's just that you have now the SPY and the owners of the liquidity mining shares have now more DUSD. So that's why this is not changing anything. So that's why buying or selling on the DEX is not changing the supply, and therefore is not directly affecting, I mean, it affects the price, but it's not affecting the demand and supply balance. It might, if there is a premium, a strong premium, it might affect the supply by incentivizing the creation of more SPY. But if not enough SPY are created by loans due to the premium, then we need some other way of exchanging those tokens. And that's what the FutureSwap is doing. FutureSwap basically once a week takes the USD, or you can tell or swap via the FutureSwap. You can tell this FutureSwap, here you have the USD, change them to SPY, for example. And then the FutureSwap takes the current algo price, adds 5% to it. So that's the 5% fee, and takes your DUSD, burns those DUSD, and gives you SPY. So 5% less value of SPY compared to what you gave in as DUSD. And the other way around too, if you give in SPY, you get 5% less DUSD. But that's your plus minus 5%. That's a fee of the FutureSwap. But it actually burns DUSD and creates SPY, or if it's done the other way around, it burns the SPY and creates the DUSD. And therefore makes or helps to regain the balance in the supply and demand, and therefore supports the price level and keeps, because it does it plus minus 5% around the oracle, so it keeps the price close to the oracle if in this range. So that's the rough idea or the basic functionality of the FutureSwap. As I said, happens once a week, happens only, or it only makes sense, say it this way, in a premium or in a discount of more than 5%. And then everybody can do it, make use of it, and therefore trade the stuff. And a lot of people are doing it and therefore making sure that it's within the range. So let's look at how it's affecting or how it's behaved over the last 1.5 years. So we have, for example, the SPY chart. This is now the chart of the SPY DUSD pair on the DEX. So with the price in the red green line, the bars, and the dotted lines are the oracle plus 5% and minus 5%. So that's the range that we want to be in. And if you look at it, you straight away see in the beginning before that the FutureSwap didn't work yet or wasn't there yet. So we came in with a very strong premium. We were still in a premium, and it got it down over some weeks. Then we were in this range and sometimes came up on the upper bound and down on the lower bound and pendled ping-ponged between them. Here you see that's basically the time when Cake bought those dTokens. They used 30 million DUSD to buy tokens. That's why it shot into a premium and stayed in a premium for a pretty long time, because there was a lot of volume to be taking put in. So the demand was crazy, and so a lot of supply needed to come in via the FutureSwap. And after that, since that's done, we then came a bit in a discount again, and now are pending on discount, and now we are back in the range. So now question is, what's the effect of the FutureSwap, and is it good for the chain or not? Because the main critic on the FutureSwap is this: it can create algo DUSD, or some people say it will definitely create algo tokens over time. And yes, it can, and we'll come to that, how it could do that in a minute. But first, let's check what it actually did. Because if you think of the FutureSwap as a market participant, so think of it as the counterparty, like the market maker on a central exchange, where you have all the traders and you have market makers who provide liquidity and also make sure that the price stays close to the target price for futures, for example, and everything. The market maker is always giving you the counterparty for the trades, or most of the trades. And that's basically what the FutureSwap does. As soon as we are out of the range, it provides you a counterparty to get the trade out of it. So we can measure how the FutureSwap, what's the effect of a FutureSwap for the chain, by measuring what would be the balance or the profit or loss of this if you look at it as a trader. So what does the FutureSwap make as money or coins for the chain when you think of it as a trader for the chain? And every time the price is above the range, above the 5% range, it's basically the time when the FutureSwap would sell tokens. It's not 100% sure that it does. It depends on if people use it, if it's the right time of the week, because it's only once a week. But I just marked here the areas where it would be possible, or where it would make sense, or where it could be that the FutureSwap actually traded. Every time it's above the range, it's selling, and every time it's below the range, it's buying. So if you look at it, in the beginning, FutureSwap was selling a lot of tokens, creating tokens and giving it out. So selling a lot of tokens here, selling tokens here, because here we are at the range or above the range. And then here we have a buying of the tokens because we are on the lower part of the range. Could be selling here. We are on the upper bound, not 100% sure, but could be likely. Here we are on the lower bound again, sometimes below. So here is buying again. Definitely a selling because creating supply for the cake buys. And afterwards, we had a long time of more of a discount. And here's a lot of buying from the FutureSwap, and now it's in the neutral area again. So looking at it as a trader, it's selling high, buying low. So always the difference between those areas is the profit from the FutureSwap. So actually, this would be a pretty profitable trader. If you trade the market like that, you make a lot of money. Now you can say, yeah, but the prices are going up and down, and it's a side market. Yeah, true. That's the best scenario for us, any trader that goes with ranges. Let's look at maybe that's stocks. So let's look how bonds behave. So TOT, there we have an overall a pretty continuous downtrend. And here again, we see selling in the beginning, then it shot down into a discount, buying, sell high, buying here, low below the line, up again, a lot of selling here, maybe a buy here, definitely some buying here, could be selling here, and then buying again here. So again, if you take the differences between those and here, we would have a lot of profit. And one thing, or one pattern that you see is also a bit of a technical topic, because prices on the DEX only move if there is volume. And if now the Oracle, like, where's a good example? Like here, if the Oracle moves down, the overall prices went up. If the Oracle moves down, the price, if not enough people sell the TOT here on the DEX, the FutureSwap needs to get in because the price moved down and otherwise it wouldn't go down. So if nothing happens, it would stay up. And FutureSwap needs to step in to get it up. I think you also see it a bit better here. Yeah, exactly. Where we go down, prices go down, and as soon as it goes up here, it needed to step in. Also here, it was down. It was above the limit, so no need to do anything. But then the Oracle moved up, so the FutureSwap started to have to push it up, and it bought here. Again, here, I mean, here we have the cake buys, but here with the sales, we always have this, that either the market is reacting accordingly, or the FutureSwap needs to step in. So we have this effect that the FutureSwap is actually buying low, selling high, making profit. Now, that's a bit of anecdotal, two charts. Let's look at the actual numbers because we know how much dTokens and coins the FutureSwap burned. We know how much coins the FutureSwap created, and we can calculate the difference and then say what would the difference, if we say, okay, that would be the current balance of the FutureSwap, the current balance in each dToken and the current balance in the USD. And if we multiply that by the current dollar value, we would have the current trading balance of the FutureSwap. So if we do that, we see here from the beginning, up are the minted tokens. Bright green is the minted dTokens, dark green is the minted DUSD from the FutureSwap, and down dark is again the burned DUSD, and light red is the burned dTokens. In the beginning, there was an oversupply compared to the supply of the dToken and oversupply of DUSD. So we burned a lot of DUSD and created the necessary dTokens from it. So it shot up, and we see over time it got a lot of overall minted, but also then we started burning dTokens too, and creating DUSD compared to the burned DUSD. And here, the most important thing is the line in the middle, which is the delta, the current volume, USD value delta or DUSD value delta of the FutureSwap position, basically. And you see in the beginning, if it's negative, it means the FutureSwap burned tokens, because it's shown here, so it's not shown as the balance of the FutureSwap, but as the delta, did it burn something or did it create tokens? So negative means it burned tokens. So we see in the beginning, it burned far more. I think it's 5 or 6 million. We got the delta down, then a bit up. With the market, it's also a bit, if the market goes up, of course, this value goes up. If the market goes down, value goes down. Here we see now, it's basically, even though the overall value of burned and minted tokens is fluctuating a lot and really going up and up and up, because over time it burns and mints. It still means that the delta is basically flat around the zero. And if you look at the numbers, currently we have a delta of, if you take for example, the minted DUSD versus the burned DUSD, we have around 70 million netto burned DUSD compared to the dTokens. And compared to that, we have a delta of minus $1 million. So, or 1 million DUSD, because in the FutureSwap, in the dToken system, 1 DUSD is $1. So compared to all those values, it's a pretty small number because it's not big, but most importantly, it's below zero. So overall, in the first 1.5 years, the FutureSwap actually burned tokens and did not create tokens. So the algo tokens got reduced by the FutureSwap. And what we also see is both here, and even if you look at any chart, it does what it should, because it keeps the price in this plus minus 5% range around the oracle. Sometimes there's short, if you have a lot of market fluctuation, there's short spikes outside, but overall it keeps it within this range. So yes, FutureSwap does what it should and it burns token. But fair point, it's only 1.5 years and it's only sideways market, basically up, down, nothing big. What would happen in a bull market for 10 years, for example? So let's assume that, and let's have a bit of a look. I mean, that's a bit speculative. I think we can analyze that in 10 years and hope we have a bull market for 10 years on stocks. But just to get a bit of the feeling or an understanding how I imagine this to play out over time. Let's look at the SPY from 2009 to 2019. Strong move up. The red line is now the price plus 5%. The green line is the price minus 5%. So that would be our FutureSwap range where we want our dToken to stay in. And I do here the black line, which is basically what I think would be a realistic scenario. I mean, as you saw, this is now a weekly chart, and as you saw, it's moving far more in between, but just to get a picture of the overall movement, to understand why I think it's moving or it's working. First of all, the classic critic is, what would happen in such a case? There would be immense amount of algo tokens created, because you swap in here, everybody would buy here, and then it goes up 250%, and then everybody swaps back here. So if you swap in 100 DUSD into one SPY here, or 105 DUSD into one SPY here, you swap out this one SPY to 260 DUSD here. So the delta is 155, so 155 DUSD created. First of all, yes, in theory, if this happens, if everybody swaps in here and everybody swaps out here, this would happen like that. What's holding against that is, on the one hand, we have the delta, the fee. So we have the 105. So even if you have at 100, you swap in at 105 and you swap out 5% below the actual price. And over this time, there are the dTokens and the loans, the backed loans in the system. Because if we are in a stable system with an algo ratio of 10-20%, 80% of all the tokens in the system pay interest. 5%, maybe 3%, depends on the vault and everything. But there is interest paid on all the tokens. Not all tokens are created via FutureSwap or swapped via FutureSwap. Because if we now take, for example, those 100 DUSD that get swapped in, if they were created by a loan and they get swapped out here, we have 100 DUSD loan in the back somewhere, which is then paying interest while this is happening. But not all the loans are swapped via the FutureSwap. So there is more loans in the system than actual volume in a FutureSwap. So even if all the FutureSwap tokens create the same amount over 10 years in algo tokens, we have far less. I mean, if we look at the numbers, we have here now a net 70 million here, and we have 200 million overall tokens in the system. So the swapped amount is here not even 30%, and that's now with all the oversupply and everything. I think over time, if the stablecoin pools will really be the biggest liquidity pools in the whole system, we will see a massive amount of loans compared to the actual open interest, so to speak, of the FutureSwap. So even there, we have this FutureSwap potentially creating algo tokens versus loans paid on the dTokens. Because if we have 5% over 10 years, we have more than 50% in interest rates paid on the loans. And if they now create for the same amount, so the volume of the FutureSwap gets doubled via algo tokens, for example, worst case, absolute worst case, and we have only 20% of the overall volume in the FutureSwap, means we get 20% of the overall dTokens system in algos, but we pay 50% of the whole dToken system in fees and in interest. So we burn more with interest than we created with the FutureSwap, even if this worst case of the FutureSwap over 10 years. So even then, we need actually the FutureSwap created algos to counter the interests. And we likely need to think about reducing the interest rates over time, because otherwise it's burning too much. I mean, I know right now everybody is like, we need to burn and burn and burn and burn and burn. But I think over time, this needs to be a valid discussion if we have too high interest rates in the system right now for the long run. And now let's see, because I said it's a worst case, let's see what such a realistic case would be. Because as we saw before, in only the 1.5 years, we saw the up and down, burn, buy, sell via the FutureSwap. let's look at that. What I would say is a realistic, in my opinion, realistic scenario. If we start down here, we will likely start on the lower side. The price pushes up, so we need the DEX to push up. Might be via people's buying, but on the bottom, not so many people buy usually. So it goes up, hits the wall of a correction. So here we would get pushed down, go into the bounce back, get pushed up, down, pushed up. So I would expect on the whole 10 years for the real price or for our DEX price to ping pong a bit between those areas, and every time it bounces off somewhere, the FutureSwap gets active. So if we have the bubbles that I had before and put them in here, I would expect something like that. Yes, I think, and I totally agree, that we will likely have a negative balance for the FutureSwap. That on a case like that, where we have a long bull run in stocks, that the FutureSwap will create algo tokens, because a lot of people on the DEX will be long in the native DeFi, on DeFiChain, will be long the dTokens. So there will be over demand, and the FutureSwap needs to create tokens, and they will stay in the system over time. But we will see all the time buying. So again, FutureSwap buying of the FutureSwap, buying here, selling here, buying here, selling here, trading along the way, building up a position. Yes, but compared to the volume, where we always see the 5% taking out, and this up and down all the time, I think this will reduce this effect of created algo tokens from the FutureSwap even more compared to the theoretical worst case. So that if we have a move up of 100 or 250%, I think we might see, I don't know, 10, 20%, 30% of that created in algo tokens. And as I said, compare that to the interest rates, to the auction fees and everything that get paid over this period of time from the rest of the system. And we need to balance that out. And therefore, I don't see any risk of the FutureSwap creating too much algo tokens over time. But it does a perfect job in keeping the prices within the range. So yes, from all the data I see, from all the effects and everything, my opinion is clear. FutureSwap does what it should. Right now, it doesn't create even any algo tokens. Right now, it burned algo tokens, and over a long run, it might create algo tokens in a strong bull market. Needs to be seen, but it might, but not in a level where it gets any problem for the rest of the system, and actually is needed to balance out the burn from the rest of the system that we have over time. So I hope this cleared up a bit the whole FutureSwap topic and what I think about it and what I think of the effects and everything. If you have any questions, leave a comment, leave a like. If you agree, yeah, feel free to tell me. Always like people agreeing with me. If you disagree, also feel free, tell me what you think and why you think it's different, where I'm wrong, what I see different. And with that, today we are seeing the first release candidate of MetaChain. So moving a lot of progress there. So looking forward to the next days and weeks. Maybe I do a video about that soon. Let's see. With that, see you in the next video.